Welcome to another edition of Frontier Opening Bell. It's Thursday, and of course, this is the show. I'm Temple Ashaju. Now, let's look at the markets. Just before we do that, we've got Onyeka joining us. Onyeka joins us from PFK Capital Management, and of course, Boason, a regular on the show, and the executive editor of Frontier Africa Reports. Thank you, gentlemen, for your presence on the show this morning. Let's look at the markets, where the Nigerian exchange was positive yesterday by 15 basis points. The BRVM stock exchange in Cote d'Ivoire was also up some 0.19%. The Egyptian stock exchange in Egypt was down 0.11%. Nairobi Securities Exchange positive by 48 basis points at 174.17. The Johannesburg Stock Exchange at 67,000 psychological line was down yesterday 0.93%, specifically in reaction to some news that came in from the President, Cyril Ramaphosa. Let's move on to the East African markets, beg your pardon, where Citi, JP Morgan gets Kenya's book running for a dollar-denominated sovereign bond. Trans-Century shareholders approved capital raise of 1.2 billion ordinary shares. Multiple hauliers goes under administration over 14 billion Kenyan shillings debt. Uganda gold earnings climb 11% to $175.61 million in the month of April. Merj Exchange listed PFK Capital issues fresh 1,600 bonds into its Class 2 to 20% bond offering. Boason, you're the man to help us understand these headlines from the eastern part of Africa.
Yeah, Tempo, I'm just going to go against the curve this morning because I'm thinking, you know, I'm talking about the Citibank and JP Morgan getting to be the book runners for the Ghana sovereign bond. I just don't know when we'll be able to have institutional capacity in Africa. For example, if Kenya wants to do a sovereign bond, and you have the book runners from Nigeria, from South Africa, from Egypt, from Uganda. Instead of using these names on Wall Street, they take millions of dollars in fees for all this from all of us on the continent, 55 countries, anytime we're doing, and from Cairo to Cape Coast to everywhere. So maybe sometime we can do something. Maybe time has come for us to begin to see how can we build financial institutions capacity on the African continent so that we can keep the money here, because I still don't understand why all the time we're doing sovereign bond, we're doing Euro bond, we're doing commercial bond. Is all these big names on Wall Street that gets the chunk of the money even before anybody else gets it. I hope they won't dislike me for that, but I'm sorry. I think it is time that on the continent, we can run 55 countries and we're doing sovereign bonds or Euro bond, whatever it is, corporate bonds on the global debt market, and we don't have book runners that can do that effectively on the continent and just make it happen. On a very second note, very quickly with the Uganda, keep an eye on these guys. They look like they're going nowhere, but they're going somewhere definitely, and they're proving it for if their gold exports in the month of April alone is about 175 million US dollars. Tempo, there's a whole lot of things under the ground there that you can pick up. Thanks.
Thank you very much. Onyeka, I'm not sure you have anything to say, and if you do, just go ahead.
Yeah, Tempo, thank you very much. I mean, I'm just going to speak to, what Boason talked about. And yes, it is very frustrating that, lots of the advisory fees and the book running fees tends to go to, the larger global players rather than African players. But I will say that it wasn't just those guys that were involved in the transaction. The structuring of the deal and the financial advisory fees largely went to firms to African firms. I think Rand Merchant Bank was involved significantly in the transaction. There was another Ghanaian, investment bank that was involved in the transaction. However, the book runner's job largely is to lead the road shows for this transaction, and this transaction requires a lot of foreign investors, and so the government is trying to tap into the client base of the global banks, and until we start having African investment banks that are domiciled across the world, that become global banks rather than African powerhouses, we will continue to rely on, a lot of these foreign banks, when we need their client base. And that's what it is. But I do fully agree with your sentiments there.
Many thanks, Onyeka. Let's move on to the West Africa and Nigerian markets headlines, where Dangote Cement has just issued 50 billion naira Series 1 fixed rate senior bonds. Ghana's gross domestic product grows 3.1% in the first quarter of 2021 versus 3.3% in the fourth quarter of 2020. Central Bank of Nigeria may start printing the Gambia's currency, says Governor Godwin Emefiele. In Nigeria, again, foreign inflows into equities are 78.31 billion naira in the first 4 months of the year. NGX delists Evans Medical PLC, 3 other companies. BEAC boasts 58.15% profit growth to 30.99 billion franc for the full year 2020 earnings or report that was published recently. Let me start with you, Onyeka, again, and then hear the thoughts of Boason on some of these market headlines.
The Dangote Cement bond situation, I mean, we know that they've been planning to come into this market, especially the bond markets, to fund their expansions across Africa. They've had an AFCFTA program, and they are one of the few manufacturing companies that have, had a specific program to target the advantages brought on by the AFCFTA. And they've talked about funding it largely with debt. They have a 300 billion naira bond shelf program, and they've only tapped into 50 billion naira of it. And we expect to see even more as they continue to expand across Africa. We know that they're trying to build a fortress around West and Central Africa, by building more integrated and grinding plants. And I think it will be positive for all the countries that are involved, and largely positive for Nigeria also. To talk about the Ghana story, I think that's very interesting. About 3% GDP growth. A 3% GDP growth. We know that they were at 3.3% in Q4. In Q4 20, but we know that in Q1 20 they were at around 7.something% growth levels. We know that the pandemic has hit them hard, like most of the other African countries, but they seem to be finding their feet fast, and even faster than the global than most analysts expected. We know that the World Bank had projected about a 1.4% GDP growth for Ghana, but they seem to be doing even better than that, largely led by the agriculture and the services. Sector. And beyond that, everything is largely optimistic for Ghana because they seem to be making the right moves, whether politically or economically. They seem to be focused on growth. The reduction of their interest rates last year, last week or last month, even though it did not it wasn't going to do anything significantly in terms of improving credit to the economy. It was a signal from the central bank. From the Central Bank of Ghana, that this was where they were focusing. This was where the government was largely focusing on, and we expect to see even stronger growth as the economy continues to rebound from Ghana in the future. Beyond that, looking at the CBN and the Gambia story, we know that the Gambia has been having some currency shortages for a while now. And we know that they've signed an agreement with the foreign country. I do not remember the country, but they signed an agreement to produce, to mint their currency for about 2 years. But they are looking for even more partnerships with other countries in Africa. They've come to meet the CBN. Nigeria has a lot of spare capacity to mint currency, in currency minting, as we started to go a bit cashless over the past couple of years. and according to the CBN, we have enough capacity, and once if Gambia is ready to give the go ahead, we should be able to accommodate them. And then finally, in terms of foreign inflows into equities, coming in at about 78 billion over 4 months, that's a very small amount compared to what we normally do. Generally, when I came into this market, I know that foreign activity in the equity market typically tended to account for about 50% of activity in the market. Now we're looking at somewhere between 15 to 20%, which is quite weak. But the story in itself is not how small it is, because we've been seeing this weakness for about a year and a half now. The issue is that we are still seeing a lot of bleeding in terms of foreign activity. While foreign inflows were about 78 billion, between January and March, foreign outflows were around 90 billion already. So we are still seeing more foreign investors leave the market than enter into the market, and that is still a problem, especially because there aren't a lot of foreign investors playing in the equity market right now. But we all know the reasons, and we don't really need to jump a lot into that. So I'll leave the floor open for Boason.
Thank you very much, Onyeka. Thanks a great deal. Boason, I'm sure you would like to speak to the capacity that Nigerian central bank has to be able to print for another central bank.
Well, I don't think there's any much a problem there. Remember this very funny story about Liberia's, is it Liberia last year, 2 years ago, when they were printed their currencies coming from overseas in 2 truckloads or whatever, and got missing at the seaport or at the airport on the way to the central bank. That's what the story went. Then later, it was not funny where the money actually. Till today, we haven't heard about the 2 truckloads of money that were shipped in to Liberia's central bank. Really quite funny how 2 truckloads of money disappeared. And then there's a bit of an inquiry from the administration in Monrovia. Till today, we haven't heard anything. I'm going to check again what's the latest. But that money just suddenly disappeared. You spend so much millions of dollars, whatever, to print local currencies, and you bring it in. Then it just disappeared overnight. So next door in the Gambia, just a few kilometers, whatever, away. So the Gambia said, look, why don't you print from Nigeria? The NSMPC will do that for you. The facilities in Lagos and in Abuja, they've been upgraded. The NSMPC, Nigeria Security Printing and Minting Company, that's what NSMPC stands for, had been revitalized over the last 10 years or thereabout, that I'm very proud of what they can achieve today. Don't forget, Tempo, in the 90s, NSMPC was run down completely, that you hardly print a single toilet paper. And this is a multi-million-dollar facility. But then the whole reorganization came in, I think, during the Lamido Sanusi's period, and Emefiele came in again. He continued on that trajectory. They have a new board. They have a whole focus. They got new machines. So I think they got all it takes to print for. And I don't think Nigeria will be charging them in dollar terms. I think maybe they will be charging them whatever currencies to print. But that keeps all the whole African integration. I want to see more of this kind of thing happen. And Temple, the reason why you asked me is because I'm going to be very happy about it and speak very highly about. On a final note, I'm a little bit heartbroken to see Evans Medical delisted from the Nigerian Exchange Limited, formerly Nigerian Stock Exchange. This was one household name that we are based in Agbara, in Ogun State, but of course with close proximity to Lagos. This is a company that I had the privilege as a young reporter many years ago when I was still in the newspapers business before I went into television to go on an industrial tour. And there's a good Evans Medical, big name, saw the advertorial on television about their products, including later they started producing water and a few other things. They produce drugs for children, for women and all of that. But unfortunately now they get it delisted from the exchange. I think I'm very I'm tearful to see Evans Medical go off the market. We have very few healthcare. If you know that, Onyeka, Temple, you covered the market for many years as well. Apart from Evans Medical, how many do we have left? So this is not really good news for me. But let's move on.
And especially on the alternative securities market of the exchange, actually. I don't think there's anyone like, except for Julie Pharmacy. But sorry, Boason, you said you're tearful. Sorry about it. Don't worry. Hopefully we'll get some more companies listed on
when the company get delisted, it's like a part of you going away. You know.
All right, so let's move on to the Southern African markets, where stocks deep and South African rand was up, remained resilient as South Africa goes into level 3 lockdown. South Africa asset managers laud 100 megawatts reform. South African Airways 51% sale as well. Prosus buys key stake in EdTech Goods Habits for 3.5 billion rands. Zimbabwe approves COMESA's single African air transport market. Botswana inflation up at 6.2% in the month of May, and that's the highest since 2013. Congo's equity BCDC is to get $50 million IFC loan for small and medium enterprises. Boason, let's hear your thoughts on the other headlines and defer the stocks and the rand resilience to Onyeka, who perhaps will be able to give us some more insights.
Yeah, I like the Congo story with the BCDC, which is one of the financial services institutions like the bank and all of that. $50 million is a whole lot of money from the IFC to give to SMEs in Congo. Tempo, remember, keep an eye on your neighbor. Things are happening in Congo DRC. Remember, Access Bank is putting its eyes on Congo. Equity Bank group in Kenya has made massive inroads into Congo. There's a lot of bit of a push into Cameroon as well by some of our financial institutions. Look, things are happening within the Congo DRC. Don't think those folks don't know what they're doing. President Tshisekedi has been able to move the narrative of Congo out of those jungle things that you like saw in the old movies of the 80s and the 90s to an economy that is modernized and sitting down there in the middle of West Africa, right there at the Central Africa. Congo is also where, Brazzaville, where you have this africanews.com, this very powerful news network operating French, English out of there. Then you've got you have the Inga Dam River, Inga 3 project, which is also in Congo DRC. Then you have this, it's also the home for CEMAC stock exchanges. So like the BRVM in West Africa, Congo Brazzaville is where you have the Central Africa's stock exchanges as well. So don't write it off as somewhere in the wilderness. It's not. And these guys are coming fast. So keep an eye on that. So it's a very big market. It's a huge country, a very big population as well. And then a little bit down south is where you have Southern Africa, Zambia, Zimbabwe, South Africa. Then a little bit up to the east is your East Africa. So it's centrally positioned country that if they continue on this trajectory, a little bit of political stability, aside a bit of the virus issue with Ebola and the rest of them, I think Congo DRC is making a good show of itself. Botswana's inflation at 6.2. Everybody is running inflation at single digit. Nigeria is where we're running double digit. So I'm not going to say too much about that. Look at Ghana coming in about 7.5, Botswana at about 6 point whatever. Look, we need to run things down to single digit. How we're going to do it, only God knows, but let's just keep hopeful. Thank you.
Onyeka, do you have an answer to what we have to do to bring our inflation to single digits?
The solution is going to be a very tough one. It's largely about floating the currency, and while it seems counterintuitive, because floating the currency will see the exchange rate rise and it will drive up the inflation in the short term. In the medium to long term, it will be largely positive for the economy because they would have a stable base. It would support foreign investment into the economy. It would reinvigorate trust in the overall economy and in central banks' activities. And that's really the only option that we have, to be fair. Every other thing will turn out to be short to medium term fixes, but if we want a sustainable fix, we need to bite the bullet and go the Egypt route, basically.
Yeah, say something about the stocks dipping in South Africa and the rand continuing to be resilient.
So, it feels like it was just last week that the South African GDP story came out, and we're talking about how positive it was, and the only risk being another wave of lockdowns, another COVID wave driving another wave of lockdowns, and we are already here, barely 1 week in, and I mean the situation is really sad. We're seeing an economy that is basically trying to drag itself back up from the issues that have been brought on by COVID, by the pandemic, and this is where we find ourselves. On a positive note, though, this level 3 lockdown does not impact the alcohol sector as much as the previous lockdown measures. We know that alcohol sales are still allowed up to a particular point, and even though we would see nightclubs and lounges and bars take a hit because of the curfews placed between 10 and 4 a.m. if I remember correctly. I mean, at least alcohol sales within stores will still be allowed. So that's the positive thing. I think the more interesting story though is the energy reform. South Africa has always been, in terms of electrification, it has been like the beacon of hope for Africa for a while. While the rest of the continent was referred to as the dark continent, South Africa seems to shine brightly. There was always this one patch of light at the bottom of the continent. However, their energy problems over the past couple of years has highlighted a couple of flaws in their system, and basically they're almost at the same position as Nigeria. Well, I wouldn't say they're at the same position as Nigeria, but they're starting to have some of the problems that we have. And Nigeria has been dealing with these problems for a while, and one of the things that we have done is allow embedded power generation projects go on within factories, so that manufacturing activity or industrial activity does not get hit. Previously, there used to be a 1 megawatt cap on embedded power generation projects. I don't know what 1 megawatt is going to do for any industry. Before you have to now start getting licensing from the electricity board. And President Cyril Ramaphosa has come in and basically changed that up and increased that to 100 megawatts, which is very significant.
Your audio is ceasing again, Onyeka. I think we should just leave it there and just finish off with the Northern African markets. Get Boason to help us to clear that up. Egypt's parliament approves the full year 2021-2022 state budget. Banks recalculating interest on Egyptian chemical industry debt. GSK Egypt first quarter profit after taxes down by 30% year on year to 22 million Egyptian pounds. Attijariwafa Bank completes 1 billion Dirhams securitization bond, and Tunisia's National Agric Bank notifies start of relaunch strategy. Boason.
Well, quite a bit of corporate stories. Part of what Onyeka was talking about, the energy sector in South Africa, which still used to be a beacon of light. But then things, there are some flaws in the system. I just don't know why presidents or heads of governments across Africa find it very difficult, the holding clutches around energy, as if their life depends on it. Look, well, what does it take to say, look, do 100 megawatts, just as President Ramaphosa just said? Why did it take so many years to say, look, you can just do it? You see, when we build state-owned enterprises or corporations like NNPC, ESCOM, SASOL, whatever, our presidents or heads of government seem to use it around the political party, their friends, their cronies, and what have you. And it doesn't really benefit the people. We haven't been able to build institutions and hand it over to the people. We call it democracy. But we keep to build these institutions and hold them. Look at all the way down South African Airways. Now they're letting just go when the airline is grounded, as it were. Look at Kenya Airways, by the way. Just let it go very freely. Provide a platform, provide the enabling environment, whatever it is, state-owned, diplomatic, whatever, and just make sure that you let businesses run. That is how we should run things here. Now South Africa has waited until almost all the issues now begin to equate South African state-owned enterprises or utilities to Nigeria. That is the whole way to go. It shouldn't have happened in the first place. But the politicking and politricking in South Africa had gotten the better part, and now the economy had suffered very greatly because of politicking that started since democracy in 1994, just after the exit of President late Nelson Mandela from office, and it keeps going down a political divide. And again, I see how the impact on the economy and very critical areas like energy. North Africa, Attijariwafa Bank is keep moving on. You know, this is a very strong bank in Morocco. We don't know the size of the Egyptian budget yet, but we'll keep sniffing around to get it. What are the details? We'll get that in the days ahead as well. Thank you, Temple.
Thank you very much, Boason Omofaye, Executive Editor here at Frontier Africa Reports. Onyeka Ijoma from PFK Capital Management based in Lagos, Nigeria. Thank you, gentlemen, for your insights on these headlines here at Frontier Opening Bell this morning. I'm Temple Ashaju. Thank you for watching. We'll see you next time. Bye for now.